Hi, this is Rahul Sharma here from JM Financial. Welcome to the September edition of the Horizon Videozine. Well, this edition is special because we bring to you the Amrit Kaal report. Amrit Kaal is a technical report on the list of stocks which can do extremely well over the period of next 6 to 12 months. Well, before that, let us have a look at how the markets are placed. As you can see on this graph, the relative setup of Nifty versus the US markets, or rather the Nifty 500 versus the S&P 500 index, is pretty solid. And in fact, this is an ascending triangle that we are spotting on the charts, which means that we may see a period of outperformance that can continue over the next few weeks or months. What that puts us is India still remains a north star amidst global doom. The reason for that is we have very strong domestic flows, 20,000 plus crores coming into the equity markets through the SIP route. And secondly, FIs have not really gone short on the market, especially in the derivative segment. Yes, for a period of time they have been sellers in the cash segment, but out and out they have not been negative on the market. Secondly, because of this relative positioning of the Indian markets with respect to the US markets, we expect dips to be shallow and they may get bought into very quickly. Secondly, sector rotation is seen at regular intervals. So initially, especially if we talk of the month of August, the kind of sector rotation that we've seen, and especially like the way IT has come out, the way some of the sectors like pharma, chemicals have shaped up, that is indicating that there is relative outperformance that can continue in the market. Now, the market is not at all into bubble mode. So although Nifty is at 25,000, this move has been backed by a rise in the earnings. So there is earnings growth which is there to back this move. And secondly, there are signs of mid caps and small caps which are slowing down technically. So if we look at the month of September, we are advising clients to stick to large caps, book profits in mid caps and small caps. And one more statistic that highlights this fact is historically the percentage of large caps to the entire market in terms of market cap has been 80%, and mid and small caps have been around 18 to 20%. Well, this time around, because of the spectacular rally that we've seen in the past few months, the mid and small cap kitty has risen to 30 to 33%, and this large cap share has got reduced. We expect this to revert to mean, and what that means is we could have a period of outperformance, especially from the large cap space. Now, if we see the 5-year sectoral performance, meaning from 2020 until date, meaning from the previous top until the current top, Nifty has gone up by 2x. So from 12,200, 12,300 odd pre-COVID, we are at 25,000 levels for the Nifty. And as you can see in this graph, anything which is below the blue dotted line has underperformed the Nifty, and anything which is above the blue dotted line has delivered a return which is greater than Nifty. So as you can see on the underperforming side, we have the media index, private banks, Nifty bank, oil and gas. These are the sectors which have underperformed the market. Whereas on the flip side, there is PSE. We have the mid cap, small cap indices, the auto index, pharma index, IT index. These are the ones which have done better than Nifty. So from a risk reward perspective, automatically the sectors which are below the blue line becomes the ones which are favorites in terms of risk reward. Now let us see the kind of setup that these sectoral indices and stocks are exhibiting. So the current opportunity classification is based on these 4 parameters. First, we have the deep value candidates where the momentum is relatively low. These could be contrarian as well given the current market scenario. So sectors like private banks, financials, media, these are 3 sectors which fall into this category, and these are the stocks where one can expect the maximum headroom going ahead. Then we have buy on dip candidates where the market sentiment is positive. They have done well over the recent past. In this category comes IT, oil and gas and metals. So these are the candidates. If we see corrections, the corrections are to be bought into, and we expect them to the corrections to get bought into and recovery to happen sooner than expected. Then we have the breakout candidates or the traders' favorites. These are the candidates where the momentum is high. So pharma is one space, realty is another, and chemicals also has been added to this basket. So these are the sectors where traders can have a good time, especially given the high momentum. And then we have some sectors which are highly overbought on the long-term scales. So profit booking is advisable, not necessarily shorting ideas, but profit booking can be done in capital goods, it can be done in public sector enterprises, and it can be done in small caps as well. So this is where how the current opportunity classification of the market can be explained as based on these four criterias, and we have shortlisted a list of stocks which can do well over a period of time. Let us have a look at them. So this is the Amrit Kaal list of stocks that we've identified, predominantly large cap stocks, predominantly focused on banking and financials. So we have Axis Bank, Bajaj Finserv, we have HDFC Life from this basket, and from the reality pack we have DLF. On the metal space we have Vedanta, we have SRF from the chemical basket, and from the IT space we have Infosys that can do well. Let us have a look at each of these individual charts to get some better insight in terms of their long-term technical setups. So if we see Axis Bank, if you see the relative comparison of Bank Nifty versus Nifty, clearly it is at a make or a break level with respect to this relationship. And at the same time, Axis Bank is also trading very close to its long-term support line, long-term trend line. So the risk reward is pretty favorable, and since it is a make or break zone and we are expecting a bit of a reversal in the banking space, Axis Bank remains the top pick in the private banking pack. If you look at Bajaj Finserv, well, this stock has been underperforming since many years now. So there was a time when this was the best performing stock from the NBFC space, but now after the last 3-4 years of consolidation, we are seeing a triangle pattern emerge into this setup, and this triangle, in fact, by the time this video is getting recorded, the breakout has already happened from the triangle, and we feel that this is just the beginning of this space and this stock, and there are long legs to the rally, especially in the NBFC space. Then we have DLF, which is sort of consolidating. The pole and flag pattern is very much eminent on the monthly charts. As you can see on the monthly charts, this is a continuation pattern, and once the current consolidation gets over, we feel the next leg of rally can take the stock towards 1100, 1200 on the upside. So the current setup is more of an accumulation zone, and once the accumulation is over, one can expect a pick in momentum. The next stock is from the IT space. Now, especially after the Fed has clearly said that they are on path to cut rates, and when the actual rate cuts happen, even before that, IT stocks have started taking off. And one of them is HCL Tech, which looks pretty solid. In fact, 9 years of consolidation has been completed in HCL Tech a few months back. Post that, it has been the best performing large cap IT stock in terms of technical strength. And we feel this technical strength is expected to continue, which means that HCL Tech can do very well from these current levels. Then we have the sleeping giant from the banking space. So private banks, HDFC Bank is one stock which has been quiet. In fact, it has been many quarters now that the stock has not been able to take out the 1700 cap. Now once that happens, we expect a big move in the stock. As of now, the stock still is consolidating, and one can look to accumulate in the same. But once it takes out the 1700 mark, we feel long strides can be expected in the same. From the insurance pack, HDFC Life is our top pick. The stock, again, it was in a wide consolidation zone. The swings were very big, but now eventually above 700, the breakout has happened in the stock. And we feel over the next few months, this upward momentum can continue, and we can expect a decent upside in HDFC Life as well. So insurance pack along with the banking and financial space remains very interesting for bullish setups. Then again on the IT pack we have Infosys. So if you see the comparison of IT versus Nifty, the rally has just begun. So in terms of absolute absolute percentage in IT index, the move has been significant. But in terms of the relative performance with respect to Nifty, the move has hardly, it's like a small blip on this ratio charts. In fact, Infosys remains the top pick from the large cap IT space, and we can expect more upside in the same in the coming couple of quarters. Then we have ITC, which did fairly well in the first leg of the rally that it saw. And now at this point in time, the consolidation makes the stock attractive once again, and the stock can head another 20-25% upside from the current levels and can be bought in this current consolidation. Then on the chemical space, we have SRF, which has been into a tight consolidatory pattern. If you see the weekly charts, it has been a very sideways structure. Structures like these, when they are broken out, the stocks do change orbits and we see cyclical moves being played out. So once the breakout takes place, we expect good outperformance over the next 2 to 3 quarters in the same. And chemicals as a sector remains a very interesting bit in the entire scheme of things. From the metals and mining pack, Vedanta remains our topic. A disclaimer that I am personally invested in this stock. But technically speaking, a 15-year breakout has been established in Vedanta, and such breakouts, when they happen, generally last for years, if not months. And even if it's a 12-month horizon, we feel that the stock can do very well. So one can look to invest in the same. As we know that metals is a cyclical play, and overall the setup continues to be firm on this space, we feel Vedanta can do well over the next 12 months time frame. Then we have two dark horses or stocks which are relatively they have been underperformers, but there is a big upside potential that can be had. So in the real estate space, we picked up a small cap stock, Uptown, which looks pretty solid on the relative ratio charts. So as you can see, there is a cup and handle formation being formed on the ratio charts, which means that there is more upside in store for the same. And when that happens, we expect Uptown to do well over the next few months. Lastly, we have Piramal Enterprises. Well, Piramal Enterprises, like many other stocks, has been underperforming the broader markets, and this underperformance is set to reverse after we've seen the recent breakout above the 1000 mark. Well, such breakouts generally if held over the next 6 to 12 months, can deliver a surprise package, and the returns can be significant. So we advise to add PL as a dark horse in your portfolio. Well, these are the list of stocks which we feel the Amrit Kaal has begun for them. Predominantly large caps, risk reward seems to be favorable, and these are stocks where the long-term setups are indicating that there is more upside in store given the current market setup. We hope that September is a profitable month to each one of you, and given the likelihood of rate cuts in this month by the Fed, plus broadly a choppy August. Most of the August has been choppy in terms of Nifty movement. We expect September to give a trending move in the market, and about 25,000. We are expecting 25,500 as the first stock for the Nifty. However, the undertone of the market is pretty bullish, backed by domestic flows, backed by, in fact, there is a chance that FIs also start buying again in cash from September onwards, given the rate cut. So that also adds more fuel to the fire. So there is more upside to be had in terms of the Nifty, and 25,000 looked like an unachievable target a few months back, but here we are at 25,000, and the same way expect that this current momentum can take us to higher places as well. May the Amrit Kaal basket be profitable to you in the coming months, and good luck for your investing journey. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.